Hello and welcome to the week ahead from the Financial Times in London. Here are some of the stories we're watching in the coming days. After months of campaigning and controversy, Americans finally vote for their next president. Trade and inflation data from China may provide clues on whether the country's economy is stabilising, and we'll see how luxury retailer Burberry has performed after the Brexit vote and plans to replace its chief executive. First, Americans will finally elect their next president when voting takes place on November the 8th. Although Democrat candidate Hillary Clinton had been ahead in the polls, a new FBI probe into Mrs. Clinton's email seems to have deterred voters, with recent polls showing her neck and neck in some states with Republican rival Donald Trump. Both candidates have been furiously campaigning in swing states such as Florida and North Carolina to win over undecided voters.
If Hillary Clinton were to be elected, it would create an unprecedented and protracted constitutional crisis. She's got bad judgment. Personally, I think she's a very unstable person, if you want to really know the truth.
But you know, this is all part of a pattern for Donald Trump. Time after time, he's done things not because he thinks they're right, not even because he thinks they're legal, but because he thinks he'll get away with it. At the end of the day, Donald Trump is the poster boy for everything that's wrong with our economy.
It's been one of the most divisive campaigns on record, with both candidates attacking each other personally amid allegations of sexual assault surrounding Mr. Trump and renewed concerns over Mrs. Clinton's emails. Meanwhile, there are market concerns that a Trump victory would bring about instability to the country. The VIX Volatility Index, which is known as Wall Street's fear gauge, spiked when polls showed Mr. Trump gaining on Mrs. Clinton, and US stock markets have been sliding, with the S&P 500 suffering its biggest losing streak since the financial crisis. Next to China, where recent inflation and manufacturing data has been positive, prompting talk of its economy stabilising. This follows months of poor results along with fears about the country's debt levels and an economic slowdown. So investors and companies will be looking for more clues with its latest batch of inflation and trade figures, which are released this week. September's Producer Price Index, which measures wholesale prices, showed positive growth for the first time in 54 months, while consumer prices also rose more than expected. But there's still plenty of concerns about the Chinese economy, as our emerging markets editor James King explains.
In the last quarter, the Chinese economy grew at an official rate of 6.7%. So overall, it's going to exceed the target of 6.5% this year. But underneath that headline number, there's some very interesting things going on. In fact, we're asking at the moment whether or not the Chinese growth cycle is beginning to turn down again. We've seen some very interesting telltale signs, including the fact that real estate sales appear to have dropped off in the last month, and also real estate prices are beginning to soften as well. And as a lot of things in the Chinese economy come down to real estate, that could be a harbinger of a slowdown to come.
And finally, to luxury clothing retailer Burberry, which releases interim results on Wednesday. The British brand has had a busy few months. In July, it announced a boardroom shake-up. This will see Chief Executive Christopher Bailey hand over the reins of the company to Marco Giobetti next year, following the group's poor financial performance. Meanwhile, the Brexit vote in June has affected sales both in the UK and abroad. Here's our retail correspondent Mark Vandervelt with what to look for in Wednesday's results.
Well, the numbers will probably look quite good because Burberry reports its revenue in pounds, and the pound has got much less valuable since the Brexit vote, and that means that when they sell trench coats in New York or in Hong Kong, they're worth far more in British currency terms than they were a year ago. But although the headline numbers are going up, there are worries about the fundamentals of the business. They sell a lot of stuff in American department stores which aren't doing too well, and there are fears that they're no longer in the right places in Asia to really capture the lion's share of Chinese consumers.
And that's what the week ahead looks like from the Financial Times in London. See you again next time.